Let's take a look at Marathon Digital stock. We'll definitely touch on the earnings report as well. Let's examine the financial results and what the company tells us. We'll also look at the volatility, which dropped sharply but is now rising very strongly again. I'll also show you an interesting strategy that will allow you to earn regardless of which way the stock goes. Let's start from the very beginning, as we see that the company has released its earnings report. The report turned out to be very good. We see that for the past 3 quarters there has been positive profit, so the company is becoming profitable. I remind you that this company is involved in cryptocurrency mining, including Bitcoin. It correlates heavily with Bitcoin. At least it was until 2024, as we can see from 2021 and 2022. The company almost moved in sync with the price of Bitcoin, but recently, as we can see, Bitcoin has grown significantly. Similarly, with all other cryptocurrencies, we can look at Bitcoin. We see that it is at its historical highs. However, the company that mines Bitcoin is not at its historical highs. This, of course, raises questions for many. Let's look at their brief presentation. What capacities do I have now? That's all. You can see it on the official website. Certainly, the company is gradually becoming profitable. This, of course, inspires confidence. But this is also related to the very high price of Bitcoin everywhere. Certainly, now all cryptocurrency miners are making very, very large sums of money. Here we can look at this chart. Here, of course, are very, very large profits. But for some reason, the stock has not surpassed its historical highs, or at least it hasn't come close to the level at the end of 2021. Let's look at the volatility and see what's going on here. As we can see, volatility increased significantly before the report, and after the report, volatility sharply decreased. This is a completely normal situation because reports are always unpredictable. The stock could have either strengthened or fallen after the report, so it's natural for volatility to drop afterward. But recently, of course, the company has grown significantly by 40%. Therefore, volatility is also beginning to increase. It's currently at 100%. This will also allow us to formulate a sound strategy. Let's look at the volatility smile. We see that the volatility smile is growing towards the increase and decrease of the stock. This is a good sign. Yes, certainly towards the decrease, meaning towards the side where the volatility of puts is growing more and faster. But this is a completely normal situation. When put options are more expensive, volatility towards the increase of stocks also rises, which is also a good sign. Now let's look at the historical implied volatility. Currently, historical volatility is the gray line. Implied volatility is the white line. It's currently below its historical values. And as we know, the volatility always tends to return to its historical values. So implied volatility can rise. We can play not on the company itself, but on volatility because we have a benchmark in historical volatility. How can we play this? It can only be done through derivatives, namely through options. And I will show you now, for example, how this can be done. Let's say by mid-August, we say that volatility will increase by 20% and our artificial intelligence automatically selects interesting strategies. Here are different probabilities of making a profit: 54%. As we can see, there's 70%. Let's consider one of these strategies. Here's how it looks. We're offered to buy a call and put option with a strike of $22 for August and sell a call and put option at $22 for September. I'll tell you right away, this is a fairly complex strategy. Here we use both put and call options, as well as different expirations. And I've always said that the most complex strategy involves different expirations because you need to close positions at a certain moment, reopen them, or move options. It's quite complex. I'm showing you this purely as an example. Under no circumstances should you trade this strategy. You will definitely lose money because it needs to be managed very carefully. I'm just showing you how you can play volatility. You can play volatility like this, as shown in this strategy. I don't advise you to rely on artificial intelligence, bots, or bloggers. You should use your own judgment. Now let's look at the support levels, what's happening here. Very important points. As we can see, we have a very, very large volume with at the $22 level, also at $23. These are call options. As we can see, the stock cannot surpass these levels, especially $22. Many are wondering why we can't seem to surpass $22. Let me show you the resistance wall. Here it is. The reason for $22, a massive wall of call options. I'll explain later how market makers work, why we can't surpass this price. So $22 is also a massive barrier. And thus, as soon as we break $22, the next target is $23. In fact, there's also $25. It's a backup wall. But if we break these levels, the next block is $30. As we see, there's also a small volume there. But if we break through all of this, the stock can undoubtedly grow much, much faster. But it's too early to celebrate. I'll explain later why we also have a very large volume at the $20 level. This is put options. As we see that below $20, the stock doesn't drop yet. So how do market makers work for us? Why are these levels so important? When investors and traders buy call options, market makers sell call options. And to avoid unlimited losses, market makers must hedge all this risk by buying the underlying asset. He buys underlying assets according to delta, so-called delta neutral hedging. That is, for every option sold, the market maker buys stocks accordingly. If the stock starts to grow very strongly, delta will also start to grow, which implies that market makers should buy stocks. It's not profitable to let the stocks go above these levels for now. However, these levels end on May 24th, that is this week. These levels are not permanent. They literally last for a week, and new levels will be formed next week. This is the most important thing. This is where the interest of trading and investment lies because you can manage to see what the new levels are and play accordingly. I try to show you all these levels, of course, not often because it doesn't make sense to show one stock every day. I try to make diverse videos, but ultimately they all end this week, which naturally increases the volatility of this company. Now let's see what's happening with the stock. What scares me the most is that Bitcoin is at its historical maximum, but this stock hasn't caught up. We see a huge discrepancy between the stock and Bitcoin. Bitcoin has had a strong growth, but the stock hasn't. There are two options. Either the stocks have already priced in this huge growth of Bitcoin. This is a bad scenario because if Bitcoin starts to fall sharply, the stock will also start to fall sharply with Bitcoin. The other option is that the stock hasn't accounted for these levels of Bitcoin, and it will rise to these levels, but this, of course, is not what I believe because I assume that over a long period of time, the stock should have already played out and incorporated all the Bitcoin's market value, which may not be ideal. The situation for the stock is that if Bitcoin and cryptocurrency start to decline, this stock may also start to fall. But most importantly, I remind you of my philosophy. I don't know where the stock will go. I can't predict price movements. My main goal is smart position management. That is, creating a position and portfolio in such a way that no matter where the stock goes, I profit. And I'll show you that strategy now. But first, let's examine 3D volatility. I always try to show this graph. Here we have all the information about volatility, expiration dates. Strikes professionals often use this graph. To smartly structure the position, here's what I'm showing you. The strategy I've created and what it allows us to do. Let's look at its effectiveness and what it can bring us. As we can see, we make money in any case, no matter where the stock goes. If the stock rises to $33, we'll get $6,000. If the stock goes down to $15, we'll get $4,500. And effectively, we make money almost always. So we have a very wide range from $15 to $33 where we make a very solid profit. But again, if the stock sharply falls or rises, we can lose money because this strategy involves selling options, which is very risky. I would by no means recommend you to open this strategy because it needs to be managed. At the right moment, you need to sell options, buy options. If you simply open this strategy, it can cause losses for you. I showed this solely for you to understand how I manage my portfolio and what my strategy is aimed at. Now let's touch on market forecast. Here, the market based on derivatives, based on options, predicts price movement. As we see around mid-August, the price is likely to be between $16 to $18. This is where the highest probability lies. So by August, the market forecasts that the stock will likely decline significantly. So we'll have a quite serious drop. Again, I don't know if everyone is involved in this, but the options market and the derivatives market, in any case, are factoring this in. If we look at September 2024, here we have an even further price decline from $14 to $15. So the market says we're likely to fall. Again, it's not me saying this. Many in the comments write that I'm mistaken, my friends. I don't care where the stock goes. I'll be making money anyway. I'm showing you solely what the market says. And the market says the stock will fall. I don't advise you to argue with the market. Yes, you can outsmart the market once, twice, but in the long run, the market usually turns out to be right. Again, this is my worldview on the market. This is how I make money. I'd also like to warn you about an unpleasant situation because the company still has correlation with Bitcoin. If suddenly over the weekend, for example, on Saturday or Sunday, Bitcoin drops by 10 or 20%, for example, due to some political news or something else, then this stock may also drop very sharply in the moment, and this is an unforeseen risk. Furthermore, the stock could fall even more because selling may start triggering technical selling. Here, it will be purely technical. So I don't forget about this risk, so under no circumstances should you use leverage to buy these companies. In general, I wouldn't recommend anyone to use leverage because it's quite dangerous. Also, I remind you that my new experiment will start very soon, where I'll be building a portfolio from scratch, a new account, and I'll show you how I buy stocks, what I sell. You can watch this video where I explain the principles on which my strategy will be based.